Hey traders, Akil here. Want to give you guys part 2 of yesterday's blog post. Are you confused with what you're seeing? If you remember, guys, in part 1 we talked about kind of paralysis by analysis and seeing too much on the charts as far as different strategies or different techniques. In part 2, we're going to take a little bit more in-depth look at technical analysis as far as reading a price chart goes and really talk about the confusion that some people are having. Now, this topic came up because during this past week's Forex market preview video, I shared a thumbnail and the question said, are we bullish or bearish? And it was a pretty obvious trend, yet there were still a few people that seemed confused. So I thought it was important to touch on the basics of how to read a price chart. And for you guys that are new, head over to our website, tradeempowered.com, click that Learn to Trade tab. We have a great free webinar teaching you how to read a price chart. It's called Into the Gray. It's about a 2.5 hour long webinar, and it's excellent material, and it's completely free. All it will cost you is your email address, which is something you probably want to give us anyway. We don't spam you guys. We only send emails out when it's something of great importance. And for example, this Monday, we sent out an email offering some massive discounts on some of our educational services. Now, if you guys weren't on the email list, you probably haven't gotten that, but I'll put a link underneath this YouTube video because it does end on the 21st. And trust me, you don't want to miss some of these deals. It'll also give you a nice look at what's coming up with Trade Empowered for 2017. But enjoy this video, guys. Again, part 2 of Do You Know What You're Looking At, or whatever I titled the first one. And I'll go in and plug some live room footage onto the back end of this video.
Why would this be considered a bullish trend continuation? Sure, we'll go back a couple steps. Let's go back to the 4 hour. And we're going to do some work on the basics of reading a price chart because I love it. I love talking about the basics because so many people don't understand the basics. We had a private Q&A yesterday, and I told people that I was shocked and somewhat offended. I put up, how many of you guys saw my Forex market preview video this Sunday? Right? Do you remember the part where I said, I looked at the chart and I said, are we bullish or bearish? Right? So I got a comment that said bearish. And I'm like, okay, people are, yeah, we're bearish, Akil. It was an obvious bullish. Let me see if I can bring it up for you. I don't know if I have it here. It was an obvious bullish example. It was probably the most bullish example we can ever give. I think I have it up here. Here we go. It was the most obvious bullish example we can ever give, right? So I'm thinking, someone's like, yeah, we're bearish, ha ha ha, like, just joking around. And then I see like more people on Facebook, Twitter, like saying bearish, bearish. I'm like, these people are serious. They really think this is bearish. Now, again, when in doubt, right? Here's the easiest way to tell if we're bullish or bearish, right? Bullish. Bottom left. Top right. Bearish. Top left. Bottom right. When in doubt, right? This is the most simplest way you could understand if we're bullish or bearish. Which corner to corner is the market going? Right. But then, yeah, the more people that typed in, it hit me again that some people, like a lot of people, really don't know how to read a price chart, and it's not their fault. I don't want to say that in a way that makes them feel like, hey, you guys, you're dumb, you're stupid. They just never been taught. There's a difference. There's a big difference between having information there, ignoring it, and not taking it seriously, and just never being taught. So I always like emphasizing the point, hey, no matter what you trade, patterns, trend continuation, mechanical systems, you need to learn how to read a price chart if you're going to build a strategy. But here's what we're looking at. In general, we're just in consolidation. Recently, we just bounced off a previous level of support. And here's our most recent move here, right? We've got a swing high to swing low. Low, 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 low. We got an outside return, a little small outside return right here. We have a new structure low, right? Then what do we create right here as price action pushes up? What do we create right there? Right? So now we have an initial structure high, right? I would call this an initial structure high. Now, does this mean that the most recent move is bullish? No. right? Because we know we need a 3-point move to be bullish. We need an initial structure high. We need an outside return. We need a new structure high. And again, if it doesn't make sense, guys, make sure you go over to our website, tradeempowered.com, click that Learn to Trade button, sign up for our email list so you don't miss out on free stuff like webinars and special events. Wink, wink, there may be a special event coming up soon. Wink, wink, get on that email list. But if you're in the live room, you are on the email list. But watch that Into the Gray training. It's about a 2-hour training, I think, 2.5 hour training on this stuff. So we have an initial structure high. So we don't have a true bullish trend yet, but we're in a bullish rotation. We're in a bullish rotation here. So one can anticipate, hey, if I want to hop on a potential bullish move, I would try to do so right here at this previous level of consolidation. So we're not in a bullish trend yet, but you would be hopping on in prediction or in anticipation of a bullish trend continuing. So that would be the trend continuation move, or the bullish trend, I guess, being solidified, I guess you could say. So yeah, you can take a trend continuation trade off a bullish rotation. Yeah, you can take a trend. Technically, you can take a trend continuation trade off of anything as long as you're predicting and anticipating a trend. Now, would it be safer to wait for an established trend? Oh yeah, much safer. Much safer to do that. But you can try to hop on that first move. There's nothing wrong with that. Can be seen as anticipating an inverse head and shoulders as well. Yeah. A little slanted neckline here. But yeah, looking at your head down here. I was just singing head, shoulders, knees, and toes with my kid this morning. He got a kick out of it. He's like, I know my body parts. But yeah, you can look at this as as the first entry into a head and shoulders pattern as well, where you're entering at the right shoulder. Yeah. Or, again, if you want to be more conservative, right, you can trade it like a traditional, not traditional. You can trade it the way I would trade a head and shoulders pattern, right? You wait for the higher high, higher close. Right? Once you have the higher high, higher close here, what would that give us? This is for you, Mo. Yep, that would give us an established trend because that would give us that 3-point move. 1, 2, 3. Then you look for the pullback back into that right shoulder or that right the neckline, and then you look to take advantage of it there. So that would be a much more conservative way to do it. Make sense, guys? Good stuff. And then probably look for an extension to 107s. That's probably where we would go to next. Two higher highs, two higher lows. No, two. It would be two higher highs, one higher low. A 3-point move for trend, right? Initial structure high, outside return, new structure high, or initial structure low, outside return, new structure low. That's when we have an established trend. Yeah. So 3-point move. 1, 2, 3. 1, 2, 3. Yep. Think like an ABCD pattern, but it doesn't technically have to be an ABCD pattern. That's a great teaching moment, Akil. Good job. That makes no sense to anyone that's new. Think like an ABCD pattern, but not like an ABCD pattern. Yeah, 3-point move there. All right, pretty cool.